I don't know if everyone can hear me. I'm just, thank you very much for having me. I just joined with a different link, which hopefully works better. a good question. I'm almost tempted to just start anyway, but if you can hear me.
Hello and welcome to the Women in Finance Economic Outlook webinar, brought to you by me, Dr. Ola Brown from Freezing, London. Sorry, I had a bit of trouble getting onto the link because we from Zoom to Teams, but I'm glad to be here now. And it means that we're starting a bit late. So just to give you some background about Women in Finance is the foremost organization services in Nigeria. We also have chapters in the UK, a chapter emerging in the US, as well as a few chapters around Africa. So if after this webinar you're interested in joining us, there'll be an email address and contact details in the message box where you can put your contact details or send us an email and we'll get in touch with you. Basically, Women in Finance functions for three main reasons. We advocate for women in financial services. We aim to educate women in financial services, and we aim to help them build networks. And that's why we have these educational events every quarter, as well as social events periodically that bring women across Nigeria that work in financial services, be that banking, mortgages, public service, all together to see how we can help each other build stronger careers in financial services. Our keynote speaker today, judging from the comments both on LinkedIn and on Twitter, is already a very popular gentleman who needs no introduction. For those of you that haven't heard of him, I'm going to introduce, and his name is Charlie Robertson, and he's the head of macro strategy at FIM Partners, and also the author of a fantastic book, Time Traveling Economist. And some of the insights are particularly going to be interesting for our mostly female audience today, because in the book he speaks about the effect that fertility rates have on economic growth. He's an experienced chief economist in the investment banking sector, focused on emerging markets, frontier markets, and Africa, often rated #1 for emerging and frontier research, as well as equity, bonds, and Forex research. And that's why everybody was quite excited when we made the announcement that he'd be speaking to us today. He's a TED Global speaker and a lot more. So allow me to introduce our keynote speaker for today, who will be giving us a glimpse into the future as we look at the economic outlook for 2025. Thank you.
I'm going to take myself off mute. Thank you so much, Ola. That's a fantastic, very kind introduction. What I wanted to do was try and take you through the key things of the book and link it a bit to markets as well, and the stuff that I think you should be thinking about or using to help guide you over the next years. So this is me writing a book after 30 years of emerging markets, 25 of which I completely ignored things like literacy, paid very little attention to education data, thought demographics was irrelevant, really. And it took me an extremely long time and getting a lot of grey hairs myself before I changed my mind. And it was the data and a lot of arguments and debates across Africa, actually, which helped me change my mind. So I'm going to try and talk you through that, and I hope that there'll be some time for Q&A for anyone who can stay on. So let me just put this onto sharing. I hope that screen is going to show up well enough. I am trying to sell my book, but you won't need to buy it after this talk. So you know all the stuff already. What's not in it is this first graph that hopefully you can see. It's a red line is telling you how do global markets price developed versus emerging. And when the red line is high, the world loves emerging markets. So the end of the 70s, when Nigeria suddenly got oil wealth and actually seed funding that sovereign wealth fund in Abu Dhabi, the one that's now got best part of $1 trillion, Nigeria had to give it the initial support back in the 70s. That's when emerging markets were fantastic. The red line collapses when you love developed, and America in particular, and hate emerging markets. And that was the 1980s Latin American debt crisis. And we've been up and down for 50 years. Today, we are at about the lowest that we've been in 50 years in terms of market sentiment towards emerging markets. And when people don't like emerging markets, they really don't like Africa. Back in 2000, when we'd had the Asian financial crisis, Russia was defaulting, Argentina was defaulting, it was the hopeless continent was the front cover of The Economist magazine. At that time, everyone wanted US tech. They wanted Microsoft and Amazon and Google, and emerging markets were like written off. Actually, what people needed to be doing then was selling all that US tech and US banks and all the rest and buying emerging markets, because for the next 12 years, up until 2012, it was bull run for EM. And this is when Nigeria really started to come good and arrive on the market in terms of financial markets. That's when it arrived. 2006, 7, suddenly the money started pouring in. And 2012, super confident. Then it was Gazprom in Russia saying, we will be biggest company in the whole world. And no one wants to invest in America. It's just had a global financial crisis. Why would you do that? And yet, sadly for me, who loves emerging, we're at the beginning of a 10, 12-year run now, 13-year run now, where people just love developed. And today you hear the same things. NVIDIA's the future, magnificence, that's all you need to buy. And yet history's telling us over the next 10 years, it's probably not going to be like that. So my point is here, there's a cyclical story that drives enthusiasm or pessimism about emerging and frontier markets. But what I eventually addressed in this book was the underlying story. And the underlying story is similarly very long. I'm looking over 60 years here, and it's a horrible chart designed by an engineer friend of mine. Engineers, fantastic thinkers, but not trying to make simple charts. But basically it's trying to show you what's happened to per capita GDP in 1960 and 2019. And some countries like Korea have gone from 7% to 64%. And they've got much closer to America's wealth levels. And some countries like Guinea was about 16% of America's wealth levels, and now it's 3.5. Now, what on earth has happened? And the problem is that not enough countries have been giving us the 4, 5, 6, 7% per capita GDP growth rates that you need to see to converge with America, because America's growing at 1 or 2% per capita. Most countries grow at 1, 2% per capita. Over 50 countries in the last 40 years, that's what they've been growing at. So we've got to beat that. We've got to beat it well. So what is it about Singapore and Indonesia and Korea and Georgia and China, all those countries on the right, that's come good? And what I argue after a long time is all about education. It's a lot about power. And most surprisingly to me, it's about fertility and savings. Now, this is very different from the Why Nations Fail thesis. Now, Why Nations Fail, they've sold 9 million copies and now they've got a Nobel Prize. I have sold barely a couple of thousand copies and nowhere near a Nobel Prize, sadly. But I'm going up against them and saying it's not about things like corruption, weirdly. They say it's all about institutions, good governance. Those things really help. But what the data tells us, this data is per capita GDP in blue, I think it is. Yep. And the red line is corruption scores from Transparency International. And most basically all countries at around up to about 10,000, say, certainly $10,000. All countries have a corruption score of about 30 or 40 out of 100. It's not good. It's only when the middle class gets big and powerful that the middle class says, stop stealing my money. And that's the most important thing. So Korea has been the most successful development model on the planet, or at least one of the most successful. And it's only in the last 5 years that they finally arrested 4 presidents for corruption. 4 are in jail right now. Well, right now, this was 2 years ago, but still. It's only now, after they've got rich and successful, that they're really addressing things like corruption. So I don't think corruption's the biggest problem. It's definitely a problem, but it's not why countries take off or not. It's much more to do with education. And briefly, that little map there is an 1897 census of Imperial Russia, pre-communist. And it's showing you which was the most literate republic of Russia then. And it was Finland. It's part of Russia then. Most literate part, followed by Estonia. And weirdly, 120 years later, the richest part of the former Russian Empire was Finland, followed by Estonia. In fact, the education numbers of 1897 link perfectly to per capita GDP 120 years later. Education really matters. And I found a book by a woman called Mary Jean Bowman, written in the 1960s. And she said that you can't grow your economy if you've got less than 40% literacy, adult literacy, any language. 4 words: farming is hard work. If you can read and write that in any language, you count as literate. If 40% of people can't do that, you cannot grow sustainably. You need 70 to 80% to industrialize. So the question of why doesn't Nigeria have a huge manufacturing sector right now is very much linked to this. Now, if you look at emerging markets, I mean, there's a fantastic comparison actually between India and China. China, when I was a kid, no one bought anything from China. I mean, literally nothing. Because the adult literacy in China when I was a kid was 66%. That's not enough to have a manufacturing sector. But by the 1990s, it went above 70%, and suddenly everything's made in China. India, no one bought stuff made in India 10, 15 years ago. Today, Modi is saying made in India is his big mantra. It can happen. It can happen because he's got over 70% adult literacy in India. All emerging markets, actually, apart from Pakistan, sorry, I should say, it says Morocco twice, it should say Pakistan the second time. Anyway, apart from Pakistan. But what about Africa? Right. When the colonialists bugger off in 1960, they leave a continent that's basically got sub 40% literacy rates. It cannot be successful economies with that level of literacy. Today, we're in a vastly better place. The majority of countries that I look at have got literacy rates above 70 or even 80% now. We can industrialize. Fantastic news. What countries look best here is Mauritius and Zimbabwe. They look best already in the 80s. And amazingly, in the 1980s, they did industrialize. Zimbabwe, South Africa, and Mauritius were the first 3 countries in Africa to have manufacturing of above 20% of GDP. And Zimbabwe then messed it up. We'll get to why in a minute. South Africa is, South Africa is just different. Mauritius has been an extremely successful story. And the education numbers, if I show you the education numbers from 1950, 75 years ago now, the highest literacy rate of the countries I'm showing you is Mauritius. And today, second richest country in Africa, Mauritius. There's only one country richer, and that's Seychelles. Seychelles actually had an even higher literacy in 1950. So this lag of this importance of education, I think, just comes across again and again and again. But this is Africa today. So what we've got is green is good. Green is 70, 80%. This is me overly influenced by my daughters who go to school and talk to me about environmental stuff all the time. So green is good, but really I'm showing you literacy rates. Gray is sub 40%. Sub 40, you can't grow sustainably. So what happens in Niger or Mali or Chad is people's economies don't grow sustainably. People complain and blame the leadership. because somebody's got to take the blame for this. We get coups, we get instability. And using a survey done by the Bureau of Statistics in 2015, you can kind of estimate where we're at for states in Nigeria. So this is out of date figures, but 10 years ago, we still had northern states with sub 40% literacy. They can't escape poverty. But in the south, it's great. South Nigeria could industrialize. Now, if you don't industrialize, what happens to your exports over time?
Well, none.
They don't go up. So if you go back to 1950, I can look at countries like Egypt or Kenya, Tunisia, loads of countries. Exports basically haven't changed in constant dollar terms for 70 years because we haven't been able to industrialize. When you can industrialize, by the way, like Singapore or Korea, these numbers start to be not a few $100s a year of exports per person, but tens of thousands of dollars. Tens of thousands, off the scale for every country. That's what happened when you can industrialize. And countries like Morocco are beginning to do it. Tunisia's been doing it for years. Okay, so we've got the educated people. We've got the educated people we need, enough of them to industrialize in southern Nigeria, Eastern Africa, loads of places. What you then need is the power to give them the jobs. It's all very well going into a textile mill. It's your first job off subsistence poverty is going to a textile mill, but you've got to have power. And if we look at the grey is nowhere near enough power. And I sat in Kenya about 5-6 years ago, had a long argument with an investment banker about it. And I said, look, the government just has to build more power. It's just got to do what China does. And this guy said, but interest rates in Kenya are like 15-20%.
Try Nigeria.
Yeah, right. So I can hear somebody's comments on this. And it's not like China, where they can build more power at 1 or 2% interest rates. Because by the time the factories get built, your electricity sector is bankrupt because they've been paying 15-20% interest rates on the debt they've used to build the power. The cost of power is driven by interest rates. And this chart, I don't know if you can see all the details, but it doesn't really matter. But it's looking at India or China, it's looking at wind power or solar. What it's showing you is the cost of power is much higher if your interest rates, your discount rate is 10%, than in the lower chart if it's 3%. So even if you do build the power in Kenya and Nigeria, the cost is going to be so much higher than, say, Bangladesh, that your Bangladesh textile mill is still going to be more competitive than your Nigerian textile mill. So the question is then, why are interest rates so high in Nigeria or Kenya or Egypt or Angola? And for a long time, I got told it's because people misprice risk. These foreigners don't know how to price risk, or it's the bankers. The Nigerian bankers are ripping off the Nigerian people. The Zambian bankers are ripping off the Zambian people. I've heard this in Tanzania. I was in Tanzanian Central Bank. I said, why are your interest rates so high? I'm going to go and talk to the banks. The central bank said, can you tell us what their explanation is? Because we don't understand why, if they pay deposit rates of 2%, why are they lending to us at 25? We in the government. And it's not an African Asian thing, because we've got countries in Africa like Morocco and Mauritius where interest rates are 2 or 3%. 2 or 3%. No wonder Morocco's got amazing. I don't know how many of you have been to Morocco, but the infrastructure is incredible. Electricity is great. Airports are fantastic. Everything works. It's all because interest rates are 2 or 3%. Why? And this was the weird thing, is when I read a report by the IMF saying that there's so many deposits in the banking system in China, over half of the increase in bank deposits in the last 30 or 40 years in China is because of the one-child policy. And I thought, that's weird. I wonder if that's applied anywhere else in the world. And oddly, it applies pretty well everywhere else in the world. If you've got lots of kids, like my great-grandparents had in the UK, 7 kids, 8 kids, that was normal. You've got no money on a Friday night. And if you've got no money on a Friday night, there's no money in the banking system. And if there's no money in the banking system, if deposits to GDP are 20% of GDP, very low, money's so valuable because there isn't much of it that the interest rate's really high. But when you start to have 2 kids or less, you've got lots of savings. You can afford to put money into the bank on a Friday night. And you do that over 1 generation or 2 generations, suddenly you've got huge amounts of money sitting in the bank. Too much money, in fact. So much money that interest rates, money is not valuable in the same way anymore. Interest rates aren't 20%, they're 2%. So I bucketed a load of countries together to kind of show that clearly on this chart on the right. And when you're at Niger's level of more than 6 kids per woman on average, your bank deposits are 15% of GDP. There are no savings. Angola, Nigeria, not much better, 20% of GDP. Egypt, Kenya, still tough, 35% of GDP. The big jump happens when you go to 2 to 3 kids. That's on average when suddenly savings are plentiful, interest rates are low, electricity can be built cheaply, factories can be built cheaply on borrowed debt of just 2 or 3% interest rates. That's takeoff time. And when I show a map of Africa with the latest fertility rates, this is 2025 estimates from the United Nations, you've got North Africa looking pretty good, green. That means fertility rates of under 2 in Tunisia or Mauritius, 2 to 3 kids in places like Egypt. Nigeria's about 4 to 5 kids on the latest estimates. And we can guess now which countries are about to do well. Ethiopia, Kenya, they've got about 3 to 4 kids on average. Ghana, 3 to 4. Those are the countries where in foreseeable future it's going to get better.
There's a price to it. Go and look at those industrialized nations now.
That's a problem for the industrialized nations way down the line. And it's something to worry about and governments need to think about. In countries like Kenya right now, I'd be telling them to tell people stop the decline, because it's once you're down to 1 kid per woman on average, it's almost very few examples of it coming back up again. The West's crisis on this, East Asia's crisis on this, is because efforts weren't made 20, 30 years ago. But we're not there yet in Sub-Sahara, Pakistan, and some others. So where we are at is we've got no deposits in the banking system, very few, and therefore we've got very little lending in the economy. It doesn't change in Nigeria, Tanzania, Uganda, Zambia, because there just aren't the savings there. While countries like Mauritius and Morocco have got so many savings that their lending is nearly 90, 100% of GDP. It's very easy to borrow. It's very easy to create factories, very easy to create jobs. So what happens in any country when you've got high fertility, like 4, 5, 6, 7 kids, like my great-great-grandparents, or like Philippines 30 years ago, or like Nigeria today, but quite well enough educated people now that they can go and do jobs anywhere in the world. They leave. The Europeans left in their millions in the 19th century when they had high fertility. But the Irish, this is my grandmother's family, they were doing it 70 years ago. Then the Turks to Germany, Philippines to Hong Kong, Nigerians to Canada. This is normal. And we are going to see a lot of people go. In fact, the research done by Michael Clements says it kind of peaks at about $10,000 per capita GDP. That's where people are still making the move abroad. But after $10,000 per capita GDP in your country, they say, actually, I quite like life here. I'm making good money. I get, there's advantages, and people start to stay. But we are going to see emigration. So when's the fertility rate going to drop below 3 kids? Well, in Mauritius, it started in 1979. Now, 1983, it was still in such a tough spot that the opposition in Mauritius was saying it was colony of the IMF. And you had Nobel Prize winners in the 60s saying Mauritius is never going to make it. This is before fertility dropped below 3. But after 1979, Mauritius had the longest run of GDP growth the world's ever seen. Like, for data we know and trust, unlike China. But China's also been good, but Mauritius was amazing. Morocco's been taking off for 25 years. Egypt should be about to start. Kenya 2029, Ghana 2034, only 10 years away. Nigeria 2042, which is telling me for the next 20 years, Nigeria is going to have a shortage of savings. That's a big thing to be keeping in mind when you're making plans and trying to work out how to make money. Because of course, if the cost of money is very high in Nigeria, which it is, the returns for bringing some money into the country can also be very, very high. So there's a lot of opportunity. It's just there's an awful lot of challenge as well, because the electricity is not always going to be there for you. The best infrastructure is not going to be there for you. The challenges are going to be high. Life's pretty easy when you're India, Philippines, all the countries that are already. India's fertility rate's 2.0 kids, Indonesia 2.2. Everything's quite easy for them now. The path is going to be great. But for us looking at Nigeria, it's going to be better in the 2030s than it is today. It's not going to take off until the 2040s, is what the data is telling me. So how do we get fertility down? We try and stop kids dying. Is the first point. When 10% under 5 mortality rate in Nigeria is telling us that 1 in 10 kids are dying before the age of 5, people do have more kids, and that isn't this is I think shocking that Elon Musk is spending so much money sending spaceships to wherever when we've got problems that we could be dealing with that aren't even that costly. If I look at countries like Nigeria, Cote d'Ivoire, or Ghana, or Venezuela, the mortality rates vary hugely between those countries, but they all had roughly the same per capita GDP in 2019. So some well-targeted kind of health spending can really help. Second thing is you've got to educate women. Women are absolutely fundamental to this whole story. You can't get more than 50% adult literacy if women aren't being educated. And if women are being educated up to 18, compared to, say, Niger 13, the 18-year-old is going to have their first kid, earliest, 19? But in Niger, you might have already had 3 by then. One at 14, 15 when you're just married, one at 16, 17, another one at 18, 19. So educating women and giving them a choice to go out and work makes a huge difference. So a bit of health spending, a bit of education spending. And this then, when it comes good, when the education numbers are already good enough, and when the fertility rates come down, we then get the double demographic dividend. So you've got more savings because people can get better jobs, but you also have a higher proportion of adults in the population. So Asia was pretty messed up in 1970. 50% of the continent was kids, and there was a lot of conflict. Vietnam War, Chinese Cultural Revolution. People talked about the Hindu rate of growth in India, said it's never going to take off. Half the population were kids. Now, less than 30% of the population in Asia are kids. So you've just got, out of a typical 100 people in Asia, you've just got a lot more people who can be working than in Africa on average today, where still it's about 55-45. So if you take, I mean, this is the weird thing for me was when I looked at Greece in comparison. Greece is such an old country. All you see is old people in Greece now. But having said that, when I actually look at a snapshot of 10 people in Greece, 6 of them are working age, 20 to 64. And a couple of pensioners, couple of kids out of 10. China's looking actually really good right now. I know we worry about China getting too old, and it will, but not yet. Well, Ghana's got the least number of working age adults. So the consequence of this is that per capita GDP growth is slower in countries with a lot of kids, because the kids shouldn't be adding to GDP. They should be in school. So countries where it's 1 for 1, one adult per kid or pensioner is on the left-hand side. On average, countries grow at 1.4% per capita. And that isn't enough to converge with America. To take you back to that initial slide I showed you, how do we converge with America? We've got to beat 1 to 2% growth per capita. We've got to be getting at least 2, 3, 4% growth to catch up with America. But if half your population are kids, this is every country. What I'm showing you here is every country's in the world's data since 1960. What was the per capita GDP growth on average at these ratios of adults to kids? And Africa was at 1.2 ratio in 1960. It then got lower. We actually had a higher proportion of kids by 1990, 1.1. And we're now getting slightly less, we're at 1.3. But South Asia, Asia's what? Two adults per kid. So the Asia's the country, the countries that grow at 3, 4, 5% every year per person. That's an Asian story. So that we can zoom in then on countries and say, which ones are looking great when? And they look great when the ratio of working age adults to kids or pensioners is quite high, like 2, 2.5, 3. Vietnam in blue on the top left there. Vietnam is looking pretty good. 2 adults per kid. Vietnam's growing really well. Korea was growing really well. It looked fantastic in the 90s, but it's slowing pretty sharply now as they get too old. China's slowing, still good, still high level today, but slowing. Philippines is looking like the next big winner. If I had to go and choose where to go and live and work for the next 30 years and just feel that life would make life easy for me, it's India, it's Philippines, Indonesia, Saudi Arabia even. Saudi Arabia is boom time right now. So many adults per kid that no wonder they're doing quite well. And Nigeria's still a long way away from that time when everything's going to be feeling an awful lot easier. In the West, I mean, it's pretty bad. It's just going down everywhere. And this isn't because we're having too many kids this time, it's because we've got too many old people, which will include me in not too many years' time on these charts. The only thing I could say about this, which is quite encouraging, is at least the British are better than the Germans. I mean, this is, when I say that as a British guy, but I mean, actually, the only reason US and UK look a bit better than Western Europe is because of immigration. And yet we're seeing with Trump and Brexit that populations are going, oh, don't want that solution, which is frustrating to an economist, because you're seeing clearly immigration is the solution, but politics just isn't making that easy. Anyway, I don't want to talk too much about the West. I talked a little bit about that. I don't want to go on forever and ever and ever. Just so when I look at that ratio of adults to kids, you didn't want to be in Indonesia in 1990, ahead of the Asian crisis of 97. Thailand was actually starting to look great. It's partly why money went there. Philippines was looking pretty bad. But today, all of these countries look really good. It's really easy to sell the story, to invest in Indonesia, Philippines, Thailand, Vietnam, India, so on. And countries where the ratio is much lower is where we've been seeing default and challenges. And that's the structural story that we are stuck with, that I used to think just didn't matter, demographics, and yet it really does. So the easiest way to sum all of that up is say, how old is your country? And the countries where it's tough is when your average age is 18. It's a problem. And I've got my daughter who's 18 and she's got no savings. And that's true of her, but it's also true of a country. You get into your 20s, you're earning money, saving cash, putting it into the bank, life's feeling good. That's India, that's Saudi Arabia, it's Philippines, Indonesia. It's really easy to get it right. It's a whole fascinating other story why South Africa's not getting it right. They should be, but that's a big digression. In the main, if you're in your mid to late 20s, you're great. Then you get to old countries, and it's like, no, you can despair about them. There's going to be no growth in Germany, Italy, Japan. You know, they're just too old. But that's not the problem that we're thinking about here in Nigeria. The key point to address what the lady was saying earlier is that when you start to get a bit older, when you get into your 20s as an average age country, that's when you start saying to people, do carry on having kids. Do not do the one-child policy. Do not discourage people from having kids. I mean, this is because the difficulty is you then end up too old and you just can't get the birth rate back up again. Anyway, that's so I'm saying this is all structural, it's all about demographics. Is that always true? No. Countries like Botswana are lucky enough to have so few people and so many diamonds that they can actually get wealthy even without everything I've been talking about. $3,000-4,000 of exports a year because there's so few people in Botswana. But when we're looking at Nigeria or Zambia or Congo, copper, oil, you name the commodity, they just do not bring in enough money, even at the peak of the commodity boom 10, 15 years ago, to really be a game changer. And I show this looking just at oil exports per 1,000 people in across a load of countries. You've got the Middle East, lucky, very lucky. Lots of oil, 500 barrels a day coming out of Kuwaiti oil wells. 500 barrels a day spread between 1,000 people. That's looking good. Nigeria on the right-hand side, 5 barrels of oil per 1,000 people. So that's 5 barrels a day. Let's say $80 a barrel, $400 a day. Between 1,000 people is 40 cents US. And that's obviously mostly going to the oil majors who are sucking out the oil, or Seplat, whoever. But so we're left with 20 cents per person. $1.40 a week. That's not a game changer, unfortunately. It's not commodities. It's always going to be about the people. Educate your people, and great things happen. That's what history's telling us. Governments don't pay enough attention to this stuff. So what governments have done is borrowed an awful lot of money over the last 10, 15, 20 years. And if you look at government debt to revenues now, the countries on the right have said we're not getting the high per capita GDP growth we need. Commodity prices aren't delivering prosperity for all. Let's borrow some money and build some roads, build some electricity, build a railway. And the result has been Zambia's defaulted, Ghana's defaulted, and Ethiopia's defaulted. Egypt was lucky to get bailed out with $35 billion of Dubai money last year. Nigeria is still in risky territory. That debt level now is high enough that actually the government can't just keep on borrowing to support the growth story. We're not as bad off as we were a couple of years ago. Bond prices are up. I'm going to skip past that. I'm not too worried about short-term kind of dollar debt in frontier right now, or Africa, or Pakistan. I want to kind of touch nearly end on something to do with what can you do? This is all very well saying education needs to be sorted out, but that can take years. Fertility rates takes years. We know that. What can the government do? What can the authorities do to try and kickstart growth and get it in a better place? And one of the only things they could do is reduce interest rates. How sustainably? You've got to get interest rates down sustainably, not like MFELE did a few years ago, but actually get them down in a sustainable way. And what this another ugly chart, this is my fault this time, shows is the size of your banking system along the bottom versus the level of real interest rates. Now, real interest rates is all we're doing is interest rates minus inflation. And in the countries with the biggest banking systems like Switzerland or China or Korea, real interest rates are zero over time. So I borrow money, inflation basically offsets the interest rate. I'm basically paying 0% to borrow. So rich countries can borrow cheaply is the message. Low income countries, high fertility countries, which are going to have low deposits, we know that, because all high fertility countries have low deposits. They tend to pay the highest interest rates in the world. So if you haven't got much money, you end up paying the most to borrow that money in real terms, not just nominal. It's not just that nominal rates in Nigeria are high, but the real rates are also high over time. The one exception is in the bottom left-hand corner, where I kind of tried to strip out the current account surplus countries from the current account deficit countries. And the weird thing is that if you're running a current account surplus, even if you've got a small banking system, which all high fertility countries do, you can have basically be paying zero real rates. In fact, slightly negative, minus 0.2. So if you're running a current account surplus, what's happening? More dollars are coming into your economy than are going out on imported goods. And those extra dollars help reduce interest rates. Now, MFELE did not agree with me on this when I talked to him about it. He had a different view on how to manage the story, but so he always ran an overvalued currency in Nigeria, which then ensured a current account deficit, which then meant that there's not that many savings in deposits in Nigeria, and what there were going out of the country. And what we've seen, a big change in the last year or two, is currencies getting much more competitive. So this is a complicated table. I could talk about it in the Q&A if you want, but the key point here is the middle column. Nigeria, by the way, was about flat. It was 1.0 about 3 months ago. It's just got a bit stronger in recent months. But we used to have currencies in Egypt and Nigeria and Ethiopia that were 50% overvalued and big current account deficits, money flowing out of the country. And now we've got situations where the IMF is looking for current account to be near balance in Nigeria, even with a bit of an overvalued currency, maybe 20% overvalued. And hopefully in Egypt it's going to get better. Zambia is going to be running surpluses. There's been a shift that I think could help. Long run, very long run, what happens when your fertility rate goes down and your savings go up is your currency starts to strengthen over time. So if you look at Asian currencies on the left, over 25 years, they've all been going stronger. If you're going up on that chart, you're getting stronger currencies over time in real terms. On the right-hand side is what happens when you can't industrialize. You either kind of go flat or it's boom, bust, boom, bust, boom, bust. And we've definitely had a bust in Nigeria in the last year or two, and Egypt and Ethiopia actually on the currencies. It's a very good time to buy, actually. So what could be done? One thing that's been talked about a bit by people like me is might we see debt forgiveness again in a big way like we did 25 years ago? That would make life easier. Doesn't sound like it's on the cards. Western governments, they're all worried about their own debt and their own budget deficits. They're not being particularly generous right now, except to Ukraine. World Bank, IMF can provide a bit more cheap financing. They can, but even IMF money's got more expensive in the last 3 years. used to be 2 or 3% to borrow from the IMF. It's now running at about 4 or 5 because US interest rates have gone up. So China, what about China? Well, China threw loads of money at loads of people, Latin America, Asia, and they've got much more cautious about lending. So it is tougher. 2020 is in this regard is tougher. The big change from my perspective is that we're getting currencies that are much better, much more competitive, and give a chance for a better story. I think we got to 2 o'clock, which is nearly just past 2. It's kind of over where we're supposed to have stopped already. So I'll just leave you with the conclusions here, which is what we're going through, what we're seeing in Africa today is not unusual. It's what Europe was going through in the 19th century. Educated enough, but high fertility. We had the slowest industrial revolution on the planet happened in the UK. We grew at 1% per capita for 100 years. Now that was better than everybody else. So the UK began to look rich relative to everybody else, but they were not rich in 1900 when my great-grandparents were collecting water from a well. It wasn't a way to get swift prosperity. But you do get a little bit better off. And we are seeing that in sub-Sahara, that the per capita GDP growth rates of about 1 to 2% is enough to make life a little bit better each year. But to deliver that 3, 4, 5% happened in Europe after fertility rates fell. The Asians then said, we can do this better. And they did, led by Korea, Taiwan, Philippines, Singapore. What's special about those 4 countries is they were the first to get adult literacy above 70% after Japan. They were the first. And then they were the first to get fertility rates below 3. In about the 1980 period, 75, 80. And they all took off. And they've all done very well. They were not careful enough, though, about trying to stop the fertility decline. And that's their challenge now. And it could be Nigeria's challenge in 70 or 80 years' time. Maybe how to stop the fertility decline becomes Nigeria's problem in 80 years' time. But it's not the problem right now. Where else? Africa split stories. So we're going to get multiple different stories in Africa across coming years. We've already got them. We've always had them, to be honest. But I mean, it's just in terms of economic differentials. You've got your Morocco churning out 500,000 cars a year, and then we've got a whole heap of different stories across the continent too. So to me, it's all about women's education, child health, the government explaining that what was true to you as a farmer family, what does a farmer need? He needs more hands on in the fields. What equals prosperity? More kids, because then you've got more hands in the fields. You get richer. But when you start to get herdsmen coming in trying to use farmers' land, when people start to get competitive about land, when people are saying, actually, I need to get jobs in the city, then more hands, more kids isn't helpful, because you want to be investing in just a few kids to get their education rate levels as high as possible. And that does require some sort of government. Helps when the government gives a kind of information campaign about that. The very last thing I wanted to leave you with is I hope I'm really wrong about this. Wrong because until now, we've needed manufacturing to take off. Pretty well every country's gone through manufacturing boom to take off. And manufacturing is expensive. You need roads, you need electricity, you need ports, all heavy, big, expensive stuff. But what COVID taught us is that I can give you a presentation online for the cost of the electricity from a solar power panel on my roof, maybe, and one internet cable. And that's enough for me to sell a service if I was charging for this rather than not charging, but I ought to be charging for this, and I'll be selling you a service. and I don't have to build a port, and I don't have to build roads, and I don't have to build huge amounts of electricity. I can do it with cheap solar panel from China on my roof. So suddenly, Nigerians in Lagos, Kenyans sitting there in Nairobi, could be selling their accountancy skills for, let's say, $50, $100 an hour. And an American will be saying, wow, that's fantastic, because my guy's costing me $300 an hour. And suddenly export earnings and export takeoff can happen through services instead of, as it's always been done, T-shirts, textiles, moving up into steel and motorbikes and cars and all the expensive stuff. In which case, if that can happen, we don't need the savings we used to have to take off. We don't need 60% of GDP bank deposits. Maybe 30% of GDP will be enough to provide just enough power and internet connectivity. In which case, maybe we don't have to get the fertility rate down below 3. Maybe people can have 4 kids, 4.5 kids on average across the country. And that will still give enough savings for us to have an export takeoff. In which case, we don't need to wait until the 2040s for that to happen in Nigeria. It could happen now. So that's my dream. Now, I've been asking people about this for the last 12, 18 months. Everyone I see, central banks, IMF, and they say, we don't know. I say, well, we're seeing remittance growth picking up a lot. Maybe that's a Nigerian accountant claiming he's being remitted money from America, but actually it's him making cash through selling his or her service. And the IMF says, yeah, we don't know. And the central bank says, yeah, we don't know. All we know is remittance numbers are really good right now. That could be the emigration I talked about before, or it could be this service boom that's already happening and we just don't know. So anyway, I'm going to stop there because that's what I hope will help bring forward the story. Anyway, if there's any questions, feel free to ask, and I'll stop talking.
Wow. I'm sure everybody in the audience is just as excited as I am. It's been, even though like I've read the book, it still was interesting to hear you articulate the points in the book as you have. And just to sort of summarize what you've said, I'll start with the famous words of Tony Blair: education, education, education. And the fact that, education remains a cornerstone of economic growth in any country. So when we're thinking about Africa, when we're thinking about Nigeria, we have to be thinking education. And there was a really interesting World Bank study that showed that there was an 80% uptick when children in Nigeria used ChatGPT as a personal tutor. So we're hoping that perhaps technology can help us accelerate that. And the ministry is now working with OpenAI to see how we can sort of scale up the findings of that study, because it was just, I think, 80 kids or something. So seeing if those results are reproducible with larger numbers. I shared an article in the comments that I wrote about corruption. And, I spent last year sort of courting American investors. And the first thing that they would bring up is, oh, but Nigeria is really corrupt. If you solve corruption, then we'll invest in Nigeria. I'm like, but America didn't solve corruption before Europeans invested in America. In fact, Europeans were investing in America when people were getting shot in the streets, when they were 100%. Famous like train robbers, like when the police were corrupt, when the judiciary was corrupt, when the country wasn't even structured, when people were having to take solid gold across from London to New York. And there was no electronic transfer system, no formal banking system, and no real governance at all. It was governed in a sort of state-by-state way, and it was extremely corrupt. And it was actually the investment that brought structure, and the investment that brought accountability. And I just shared an article in the comments section where sort of I'd stated that, and I'm glad to hear our keynote speaker today sort of reiterating the points. The most interesting and fascinating point for myself and probably all the women in the room right now is around fertility rates, and thinking about the fact that, yeah, true, people under 18 don't save, and if they don't save, then they don't put money in the bank, and the only way you can get a loan from the bank is if there's money in the bank in the first place. So yeah, that's really interesting. It's Q&A time now. So I would like to see it. I hope everybody can type in the comment section. And I think everybody has access to the comment section. So rather than unmuting people, if you have questions, can we just type them in the comment section? But I have a question, so I'll go first because I'm moderating and I have a mic. Go. I just wanted to sort of understand the reasons why you think the Naira is still overvalued.
That's a little complicated, but I pay a lot of attention to some price data on the Statistics Office website, not the official CPI. And the latest figures for 43 items, I might even have it still on my screen somewhere, show I do. That food prices were up 99% in December. The official CPI says they were up 40. And food prices have been running at over 100% inflation now for over a year. Fuel prices have gone up 6 times in the last 3 years, sixfold, 600%. And in the official CPI, they've doubled. Transportation index has doubled. I think inflation's been running much higher in Nigeria. I say this very rarely. There's only 2 countries I've ever questioned this on, and one's Argentina and the second one's Turkey. And now Nigeria is the third. I just think inflation's been running much higher. So the currency sold off from, 450 or so, 400, 450 to past 1,000. And at that point, it was really oversold, and it should have been 800, not 1,000, in my opinion. And then we went to 1,600, and it should have been 1,200, in my opinion. We've had such inflation since then that now we're at 1,500, but I think it should be at 1,800, just to reflect that inflation in food and fuel, according to data on the Stats Office website that isn't showing up in the official CPI figures. There's a couple of consequences of if they've been mismeasuring inflation. 2 problems with that, and one is that GDP will be misstated too low as well. So you'd have to rebase GDP,
which they're doing,
to explain why GDP is actually 40, 50% bigger than they've been saying. Now, I'm telling you it's because they've been understating inflation. They will say it's because we're counting the informal economy or whatever they claim. Nonetheless, it doesn't matter. They're going to end up in the right place. They're going to end up giving us the GDP figure that I think is real. It's just a lot bigger than, I think they've been a bit naughty about the inflation. So the consequence of that is actually, the currency hasn't actually sold off enough now. It's just one of those things. It's very hard when things have moved as much as they've moved. It's very hard to believe that the currency could be 20% too strong. But I think 1,800 is about right, fair value.
Okay, I'm just looking in the Q&A box to see if anything has come up. No, nobody has asked any questions in the Q&A. I'll check the messages as well. And I haven't seen any questions, so I guess that means that everybody was quite satisfied with your presentation. So I'm going to hand over to the head of the Education Committee now, Mrs. Bubi Lawson, to give closing remarks. I'm sure she might have a few questions as well. Thank you so much. I really appreciate you gifting us your time and honoring us. And for everybody on the call, the book is called Time Traveling Economist. It's available on Amazon. Is it available in any Nigerian bookstores?
It was in the Nuria. Is that Nuria? I get them. No, the one, the Hills one. Yes, it is. It has been. I gave a talk in Lagos when I launched it in 2022. So I just get my bookshop names mixed up. I'm so sorry.
Okay, so please buy from Amazon so he gets his dollars quickly. But if you can't access Amazon, then you can buy from a Nigerian bookstore.
Yeah, there's a good online version, because the online thing on Amazon's a disaster. The better online version is via the original publishers, Macmillan, and that's in my Twitter kind of thing. There's a link in via my Twitter. You can find a link, or I'm always going to reply and say the best place to find it. It's been on discount recently, so that's quite good.
So you can find him on Twitter, or you can find him on LinkedIn. He's given us his time for free, so please buy the book. I'm going to hand over to Mrs. Bumi Lawson now to ask any questions and give closing remarks. Thank you so much.
Thanks,
yes, thank you. Thank you so much, Robertson. I actually did attend that your speaking engagement. I think it was with Okoye when you launched your book. So I read it. I actually included it in a presentation I did on economic reform about fertility and so on. So really, because I'm very passionate about education. Yes, so thank you. Once I saw your name, I said, I'm going to do everything to make sure I attend this program because I'm actually traveling. I'm waiting to go into a spa at this moment, but I said, no, I have to speak. So one question I have before I go into the thank yous is most of this reform takes time. You talked about education, we will see the benefits in 10 years. Fertility rates, we're not going to kill all the children today. I mean, just to be, so it's going to take time. One of the things that we see with our political leaders all the time is they have a 4-year tenure. They want to showcase things. So they are not investing in education that people won't see, reduction in fertility that people are going to protest against. How do we convince governments to actually invest more long-term for these transformative changes? And I tell you, they know all the things in your book and so on, but they can't, the path to achieving it and still winning elections sometimes distorts that will from investing long-term. What is your advice to be able to do that?
But me, that's the best question, and I've got no great answer. Why was it that Korea and Singapore and Taiwan and Hong Kong did so well at getting these things right in the 70s and 80s? Because they didn't have democracy. None of them. They had coups, and Lee Kuan Yew was there forever. And so that kind of, it does make you somewhat despair. You hope that a leader comes along and also then does something about it. Actually, I was in Thailand the other day. I was asking Thailand. Thailand's really interesting because they did get the fertility rate down. They sorted out education, but they've done too much. I mean, they're getting quite old. They're older now on average in Thailand than UK. Their median age is like 43 or something. But that was a general again. It was a general who came in and said, "This is the way it's going to be." This just makes you think that Rwanda is going to do a little bit better. But the trouble is, the generals are not always the answer either. You look at Pakistan. Pakistan's sitting right next to India, Bangladesh. There used to be one country with Bangladesh. Bangladesh, somewhat autocratic rule in the 80s and the 90s, sorted out education and did well. And Pakistan, it used to be, the same country as Bangladesh, didn't. And the result of this now is that India is powering ahead of Pakistan. Pakistan, which has got the security worry about India, and the generals terrified of India, always worried there's going to be a war. Even they don't sort out the education. Even when they've got a vested interest in trying to rival India, they haven't sorted it out. And they've been promising to sort out education for 45, 50 years now. So I'm afraid I despair a little bit about this. I do. Every time I go to Pakistan or speak to a Pakistani official, I'm always saying, why haven't you sorted out education? Because you've got perfect examples next door to you of countries that did better and are doing better. Why haven't you sorted it out? I'm intrigued as to why. Maybe there is an element of governance, but I think you just need some good lead. In that case, maybe being a bit lucky with the leaders helps. I haven't got any better advice. Unfortunately, I haven't worked the answer to that difficult one.
Yeah, honestly, that's something that's always been on my mind. Thank you so much. Maybe your next book should research on that. I think it will be very controversial, the issue of democracy and what type of governance you actually need for development. Because I've seen some papers talk about, is democracy the right type of governance for developing countries? Because you do need long-term, you do need probably some sort of, strong man or woman that enforces, yes, exactly, that enforces those rules. So thank you very much for that. And thank you so much for today, for giving us your time. The insights that you shared were really beneficial. as always. And really, you deserve a Nobel Prize. So I do think I do think it's coming. It's coming. Just keep an eye. It's coming. So thank you so much. On
Pleasure.
behalf of the EXCO, everyone who has attended and who's listened to you, I really want to thank you very much for today and for the time. And good luck in your future endeavors. Thank you so much.
Thank you. I really appreciate the invitation. It was very kind of you
Thank
to
you.
host me. Have a lovely day,
Yes,
everyone.
thank you. Yes, thank you. Thank you. Bye, everyone. Dr. Ola, anything you want to add? Okay. Bye, everyone.